Thank you for tuning in to another edition of the VULCAN Report. This end-of-day report is for trading on Monday, January the 30th, 2017. Looking at the weekly chart on the Dow, even though the Dow did manage to pull back and close below 20,000 today, as you can see here on the chart, there's really no technical damage. We're just still trading within a consolidation pattern right now. It's in a range, trying to maintain above the higher end of the range, but still above trend line momentum support, and that's pretty much the way it is right now. I don't see anything changing with that anytime soon. It's just the way it is. You can call it toppy, but this thing could easily explode higher, and I just don't see it coming down right now. So despite today's price action, there's really nothing to see here on the longer term chart, even on a daily chart. I mean, we're still bullish in all aspects. Taking a look though at the Nikkei, let's see. Taking a look here at the Nikkei, you can see that on the daily chart there is some movement, but still it's also bullish too, regardless of all of the oscillation on the intraday basis. Now its weekly is weaker than the Dow's, but it's still bullish, the chart, and that's the Nikkei. Taking a look at the Russell, and you pull up the weekly chart, pretty much the same story here. Still in a bullish pattern. You're not selling off, you're not plummeting, you're just trading within the bar here. This here is your acceleration point, and this is what we're trading inside of. So we're at a 50% retracement, and that's pretty much it. Again, nothing bearish, the chart. Taking a look at the NASDAQ 100. Again, staying above 5,000, and here we are. All right, staying above 5,100, staying above 5,000 still. We'll bullish the chart. All right, emini S&P 500, still bullish the chart. Taking a look at the US dollar, that is a different story on the weekly chart. 1, 2, 3, 4, 5. We're working on week number 6, down weeks in a row, coming off the 103.81 half highs. Testing this trend line support here, but still the overall long-term trend is still bullish. However, we're getting a tad bit bearish here. A close below this trend line support is bearish. And then you got one more support here, long-term trend line support at the 98 level. And a close below there is, it's way more bearish. It's super bearish at that point. Drop below the Kumo cloud and you are done. You're an official bear market at that point. And it becomes a super locked-in bear market when the trend line supports drop below the Kumo cloud as well. Can the Fed maintain its strong dollar policy and defend the dollar and keep it above dropping below the support levels? That is the question going forward. Taking a look here at GDXJ, looking at our miners, and we see here that on the weekly chart, bullish, getting up to the ramp. This is moving the way we like to see it. Wait a minute. Wrong thing. This is the Australian dollar futures contract. Well, since it's up here, let's analyze it. It's bullish. It's heading up toward the ramps. So it's looking good here. All right, let's see. GDXJ. Try this one more time. All right. All right, it's trying to get above the trend line, but then it's inside the Kumo cloud of death, stretching out this sideways consolidation pattern. Needs a break out of the cloud is what we really need for GDXJ to get going. It's in a bullish position, So it has everything it needs to push higher. It just hasn't really done so yet. Taking a look here at its counterpart JNUG. JNUG tried to get bullish today, only to pipe down. This trendline resistance is really giving it a problem. But if it can get above, if it can close above this, then we're looking at the $13 range, and then we're off the 15, and then right here below the Kumo cloud at around 18, and a breakout of the cloud will put it back up toward the $25 handle. So has a way to go yet, but this is where we are right now. Taking a look at gold futures. Gold futures had a nice run up today. We have green on the screen, still below the trend line support level. We need to close above here to get it in the cloud so that this can get running up toward the 1232 level. Then that puts us almost in the center of the cloud. We can get up to 1250. And from 1250, it can fight its way up to 1300. So we still got quite a ways to go here in the precious metal space. Taking a look now at crude oil. All right, crude oil is just hanging out. Again, we got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row of just price consolidation. That's all we got. We got nothing here. There's nothing to go here. It looks like it wants to run. You come here, you break, you continue, you have a continuation pattern, then you got a reversal. Then here we break out, then we consolidate some more, take out the old high, quickly reverse, fall even lower, pop up again, and then you get soft. So it's just hanging out. It's just a consolidated it's a sideways to slightly higher configuration. Again, I think it wants to go to 55. Just looking for that $55 close. Once you get it, it's off to the races to 60 on the crude oil. So that's pretty much it for right now. It's not a lot going on. It's the beginning of the new trading week. You got FOMC. You got so many things happening this week. You got earnings. There's just so much going on. So the market's going to need some time to, flush all this information and data out, and then we'll get an idea of where it is that we may be headed. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take whatever you can and give nothing back. See you at pulsewavetrading.com.